Hey, what's up, everybody? This is Chef again, and today we're going to make another video talking about some day trading strategies and a way to, pick some easy targets, some scalping methods here. Just something to be aware of throughout the day as to what you can do to, get some quick profits. Using weekly contracts, next week's contracts, whatever it is that you want. Real quick though, you guys do know that I don't use any indicators, and there's a lot of traders out there that do, and they use it for scalping methods. Following the 9 EMA, the 8 EMA, the 21 SMA, the exponential moving averages, and things like that, along with the VWAP, the RSI, the stochastics crossover. I mean, there's tons of methods out there, right? But for me, for somebody who likes to, trade supply and demand, I look for bases, and I like to use the pre-market and the aftermarket hours, the extended hours. If you guys don't know what that is, let's go over it real quick. So let's just go to Apple real quick and let's look, right? So for starters, I'm always on the 4-hour time frame when I chart, and I use candle bodies and the wicks as stop losses and entries and exits, take profits and things like that. So just for starters, but this gray area that you see here, this is your after hours and your pre-market, okay? Now the black area is the market being open, and that's the intraday movements for the stock. So it's very important to have these extended hours on and to understand what they're all about. The futures move after hours, and they don't stop until market closes. And not market closes today, like, today at 1 o'clock on PS, Pacific Standard Time, if you don't know. Not talking about 1 o'clock, but these open on Sunday at 3 o'clock, and then they close on Friday, I believe around 1 o'clock, 2 o'clock, around there, and that's where it stops. The futures continue throughout the whole week because you have the other markets that are trading, you have the Chinese markets, the European markets, and everything just keeps moving. We get a lot of news, sometimes after hours, pre-market, and the futures will keep on moving. So whatever that direction is going to give you for the futures, that's usually the sentiment that the stock will do as well. So for example, if the futures gap down overnight, there's a high probability that every stock in the market will gap down. And then same thing with the market gapping up. If the futures are gapping up, pre-market or after markets, whatever it is, there's a high probability that your stock will gap up and gap down. Okay, whichever one comes first. All right. So, knowing the extended hours and what they're about, it's very, very important to, gauge in on those levels. These levels are the ones that help you when you're trading intraday, when you're trying to get a sentiment for something, and where you want to, take control for buyers or sellers, right? Well, what do you mean? So my example here is going to be with ES, and I'm just going to show you real quick on where the extended hours are. And of course, I already have it charted. As you guys can see, I already have this level right here. And let's just delete that. How about that? All right, so let's go to delete. I'm going to clear this drawing set real quick. And we're going to put on some levels right here just to identify the 4-hour, right? Now, mind you, the market is still open, right? And you guys are probably wondering, like, how come you're not trading? Well, it doesn't matter because there's no setups right now, so there's really no reason to force a trade, midday. There's no reason to get FOMO. There's no reason to, force anything that's not there. But let's look real quick, all right? Let's understand the story /ES. This is the S&P 500, if you don't know, and then SPY follows ES. So wherever ES is moving up, SPY is right behind it, and that's why it's the ETF, and that's why you don't chart SPY. You chart the future, and this is what it's going to give you. This has all the data, as you can see. There is no major gap ups or gap downs. If you have the SPY chart, I'm assuming there's a lot of gaps in between, which a lot of retail traders like to look at. So let's look at the levels. So I'm going to mark this piece right here just because this was a nice resistance, as you can see. And since we have that resistance, look what happened after hours. And then the next day, it ended up popping to the top. Okay, so that is the first piece that we want to identify as to where the price action changed. So now that we have that, we can look for the next high. All right, so let's go look. And as you can see here, we couldn't get any higher than that. And we created a small supply right there. Okay, just those candle bodies that are formed together, they're creating a little supply, which tells us that there is a wall that we can't break above yet. So that's it. That's all I really need for /ES. And then I just want to get a little closer and just kind of see what's happening in between. As you can see here, we almost like retested right here perfectly. We didn't drop any lower. We didn't go to this 44.25, but we did get this 44.40 retest. As you guys can see, I do have my alerts here, and then I have my do alerts on top, and then I have this dip buy alert as well. But check this out. All right, pre-market stuff. Look where all the pre-market is. All right, right here. Here's your pre-markets. Okay, there's your pre-markets, and then there's your pre-market again. So either way, you have the full story here of where all the buyers are, you know, kind of sitting at. These buyers are still here and they're fighting, you know, to hold up this market just in general. And you guys see today that we broke below, right? But I'm going to show you where we're going to get some levels from, right? So this kind of sucks because this candle's not completely. But let's go look at the previous candle bodies. All right, very important to get the candle bodies. Look at these candle bodies here, and look where we're at. We created a supply here because we got rejected on this day. Came down here, kind of consolidated down below, rejected again the previous day, which is Monday. Today's Tuesday. We kind of hung around right here on the pre-market, and then right here we're on this 4-hour candle. We're shooting up green. All right, let's go on the 15. Let me show you how important this is, right? This is where a lot of traders call it chop, okay? This is like the retail word for not understanding what is happening. Also, a word that describes that there's no direction, okay? I personally don't think the word chop is the proper word. It's called accumulation. Accumulation is the area where there's a lot of buying pressure being built and potentially a lot of seller pressure being built as well. So it creates a top and it creates a bottom where a lot of investors come in to either buy or sell, and they're accumulating in one area. What I'm saying and what I'm pointing out is that the bigger picture, there's somebody buying here, okay? So now it looks like there's no direction, but technically there's direction to the top side coming down, and there's direction from the bottom side going up. So you can trade all sides, okay? Now look at this. Look how we're gonna use these pre-market levels, right? This is the high of the pre-market, okay? Now I don't care for the wick. And then here's your bottom for this pre-market right here, okay? All this, remember it stops right here where the blue volume bars are at, and then right here as well. This in the morning had a nice little bear flag. Okay, there is no denying this little bear flag. Here's your downtrend, here's your bear flag, and then it played to the downside, but it never continued down. Why? First and foremost, because this was just a simple pattern, and the accumulation right here was a lot stronger than the pressure for the downside. So what it did is it created this to come down using the pre-market level. Here's your entry, and then there's your take profit you trail. Here's the retest for those of you who like the retest, and it came up, and then here's your entry again for calls, that 44.80. Using these same bases, right? Now you don't have to, enter based on this flag pattern, but since we had one, I think this was amazing. So it's always nice to identify what's happening in the futures. What is it that, what is the sentiment that we have in the futures? Now don't try to go and find this on every ticker out there. You should only be finding this on the futures, right? This right here, this little bear flag. Okay. Now the break of this 44.90 would give you more confirmation that this the bulls are going to take over for the day. Okay. A lot of retail crew, they like to wait for the break above. The break above meaning the previous day high or the pre-market high, and they like to buy tops. And that's why you see those quick pops at the top on the break of, like, you know, a resistance. And then here you continue to the top. And then I'm assuming that probably somewhere out there, somebody ended up buying. As you can see right here, look. Somebody probably bought this top and it popped to the top, but then aggressively sold off right away. So a very simple strategy here is to understand where you're going to get in, all right? Where you're going to get in, identify what is happening in the pre-market, use those levels as an entry point or to get a picture as to how something is going to move moving forward intraday. All right, so here's your pre-market. Here's your entry one for puts because it was a bear flag. And then on the top of that flag, we broke to the top. The first level that you look for is right here. Break above that, we're still in control. And then your target becomes this here. Okay, that's what you have, a nice broken down ES play using the nice pre-market levels, knowing what the demand that's on the bottom, knowing that we have a pattern and using those pre-market levels, right? Now I'm going to go to Apple and show you how to use those pre-market levels again. And again, a lot of this stuff is for a lot of scalp trades. There's, I don't know how many servers out there teach this stuff, and they charge, you know, tons of money. But here it is. It's a very, very simple strategy that should be followed. Okay. All right. So here's your break above that pre-market, and then here's your break below. Did Apple ever break below? The answer is no. So what do you look for? You look for the break of the pre-market high. That's where it is. This is where a lot of traders out there who like to scalp, who like to trade weekly contracts, they like to grab the in the money to load up real quick on, like, you know, 20 to 100 contracts, and then they sell on that one push. Okay, now mind you, this is the 15. A lot of scalpers out there who use this method, they use the 5 minute and they wait till the 5 minute candle body closes over that price point, and then they tell you to go long. But look at this. So here's your entry over pre-market. So you go look at the previous day. Where did we get rejected? Here's your 0.1. Here's your 0.2, right? So this automatically becomes your first target, 173. If you entered from 172.50 to 173, that's a pretty nice return for those weekly contracts. If you continue to hold, look, you're already at that level at like 174 psychologically. So from 172.50, breaking the pre-market high, your first target becomes at 174. Sorry, your second, 173, 174, and then you look for the next psychological number, 175. Okay, this thing had potential to keep on going, and that's how you use Apple, right? Now I'm going to go show you a couple more, just so you can get the picture of this. And now I'm also going to show you the downside play, right? Tesla. All right, let's look at these pre-market levels. All right, most people will look at this pre-market level right here. Boom, you see that? And then look at this pre-market level. Okay, this is your 900 psychologically. Psychologically, this market is like 99.9% is all psychological. Okay, I know a lot of people say like 80% is psychology, and then 10% is, you know, skill, and then the other 10% is I don't know what else. But whatever it is, I think a lot of it too is psychologically, because we all battle those emotions intraday, and we all wonder, like, where is something going to go? How is something going to move? How do I know if it's the right one? And there's just so many questions, right? But let me show you. Did we break 900? We kind of got close right at the open. We kind of broke down and snapped back inside and then rejected that pre-market. As you can see how the candles are, you know, playing perfectly here. Drop back down. We claim this as a support, and then you break above, right? So this is where your retail crew comes in. Right here, look, it held support. So anybody could have entered here and then ended up taking profit. Where? What did we just talk about? The previous day rejection. Now, if this were to continue, the next target would be up here. It sounds crazy, but you guys know that Tesla has these crazy moves, right? So look what it's doing now, right? Intraday. Somebody somewhere is going to say that this is a resistance, and they're going to try to take it long right here, and it's going to have that quick pop. And I'm betting that it's going to go to this high right here, right towards the end of the day. If it does, then cool, but if it doesn't, whatever. The entry point was at this 900, and it's already had a big move, so I don't think it'll go crazy unless this market just goes like straight bullish for power hour, and then you get those like amazing pops that happen towards the end of the day, right? So that's how you use the pre-market for Tesla. Now I am going to show you PayPal, something that broke to the downside, right? Still downtrending. Jeez, I think PayPal is that amazing dip buy level. Look at this. I think this is the greatest dip buy level, but you can never fight the trend, right? And if you do it, it's more of a higher risk. So let's look at this piece right here. All right, pre-market, 120.25. Okay. And then look at this piece right here. All right, so I'm grabbing the highs and I'm grabbing the lows of that pre-market. Now, sometimes it's one of the trading strategies that you can use is you can buy at the bottom of pre-market. So that's kind of exactly what I did today. I went kind of heavy on my position right here with some weekly contracts, and then I sold right when we pushed up into that 123 because I saw that we couldn't stay above. So the first 15-minute candle went from the bottom to the top, as you can see, using the pre-market levels alone. I grabbed the strategy of buying dip because if I buy the dip right here at this 120.25, then it's very, very simple for me to stop loss right below, okay? And it's the same if you grab the top. If you're buying on the break above, you better start trailing because your stop loss should technically be right there, okay? So entry, exit, stop loss with targets. And then look what happened to PayPal again. All right, this thing ended up building a little structure here today, if you don't know, and then you could have rolled puts all the way to here. And then the minute it broke this pre-market low, you could have sold it to strength on this last push, okay? So the pre-market here is that can help you and guide you throughout the day. It's a very simple strategy, guys. And it's, like I said, there's many, many servers out there that use this, and they charge you hundreds and hundreds of dollars to learn this. But this right here, this video here, this explanation should give you everything you need to be able to scalp anything in this market, right? So let's go look at Microsoft now. What I'm going to do is I'm going to clear my chart just so you guys can see. Okay, now remember, this is a lot of this is scalping stuff, guys. Don't come in here trying to, you know, think you're going to get rich off some pre-market levels, right? Look at this. All right, so here's your pre-market, and then here's your pre-market low. It's the same case scenario right here with Microsoft. This is why I like dip buys. If you guys don't like dip buys, you don't need to trade them. If you guys like buying the tops, by all means, buy the breakout, okay? I think it's more efficient that you buy the dip because when the breakout comes, that's when the IV increases and the premiums in your IV go a lot higher. Now, if you're buying the breakout, the IV is already increased enough, so your profits are not that great and you're not capturing the best of the move. Look at it again, okay? This level here, same level here, okay? Here's your bottom, there's your buy at the bottom, here's your first target, and then your second target, guess what? Boom, boom. So we're staying in that level again, all right? So we're still at that level and nothing's really changed. So here's your entry, stop loss right below, here's your profit target, and then here's your other profit target, right? Now, if you're the one waiting for the top, like I said, you're the one that's buying at this specific level right here over this 303 pre-market, and you're going up maybe for 1, 2, 3 candles, maybe 30 to 45 minute trade, and that's about it. When you could have bought it down here at 300 all the way to this 305, that's a $5 move for Microsoft that could have gave you a solid profit today, right? So that's how you're gauging into the market. That's how you use the pre-market levels from the break above to the target of the previous day high. the scalps in between, the rejections in between. Same to the downside. If there's a downside, then let's go for the downside. Things like that. Now let me show you some bigger tickers today you can trade using Amazon as well. Same scenario here. The difference here with Amazon is that it broke to the downside. Okay, so this could have been an easy put play to the downside if anybody likes to scalp Amazon. You guys know that those scalps on Amazon are crazy. Premiums are like 5K, where you can make like 2 to 3K easily on just one candle with Amazon, right? So look at the pre-market levels. All right, so I'm going to mark these pre-market levels. Don't mind the other ones. All right, so look at the confirmation here. Okay, and this thing broke to the downside, so anybody could have entered puts here, all right, on this next candle, and then could have taken profits here. Rode it on the way back up, and it reclaimed that same pre-market level. Once you reclaim that pre-market level, that your target becomes the top, that high of that pre-market. So now we come in here, and this is like a little rally, like a little a rally-based rally, and then you get this other rally, and then here's your next target. Okay, as you can see, we're still here, and it broke just above, just a little bit, but it's good because Amazon's trending very nice today, and kind of exciting to see Amazon just hold, right? So previous day rejection as well here. Those become your targets, and once we start breaking above those specific levels, then you can continue to keep on trading those levels to the top and just scalping in between. But again, a very simple strategy, guys. There is no secret to trading with scalping methods like this. It's just, you're just literally using the pre-market levels to help you and guide you to enter your positions, right? When it comes to swing trading, there's a lot more to it. When it comes to, holding a position a lot longer, there's more to it. There's catalysts, there is bigger time frames, there is sentiment in every sector, and everything just moves so different. But at the same time, you got to know when to get in and when to stop out. I think a lot of traders have, the wrong stop losses based on their entry points, and that's what makes everything different, right? So for example, again, just like go over, if you enter on the break above, your stop loss should be right below, okay? And then this would be for a bullish play. And then this trend line right here, right below, don't let it go below any lower, okay? And same thing if you graph puts here, your stop loss is right above. You shouldn't let this candle body go inside the pre-market. You want this candle to be to the downside, and this way you get that push to the downside, and you're able to hold. Once you're able to hold, you're already considering to take profits and to get the heck out of your position because you're green on your puts. You should never let a position go the opposite direction of where you're in. So if this was your entry, you should want to move your stop loss, move it up. You want to move it up some more, move it up, and then move it up again. And then when it hits that first stop loss, get the heck out. Don't think twice. Just take your profit and run. Okay, there's no reason to bag hold something and to say, oh, well, this is going to get rejected here. By the time it gets up here, you're saying, oh, well, it's going to get rejected here again. We're going to watch for this continuation to the downside, and then it goes up. And then you say the same thing here. Oh, it's going to reject here. And it never does. And then you're saying here, oh, yeah, we're trending down. And then it gets bought up. And then you're over here saying, well, it's going to get rejected here. It never got rejected. So again, you could have entered a put here and you could have bag held this position. I know a lot of you guys do that. So don't. Respect your stop loss, respect the entry point where you got into. And if you got to get out at a break even, it's better to get out at a break even versus trying to bag hold something and lose your account 50% or 100% or whatever percentage it is that you full ported something. So either way, respect your stop loss, guys, and entry points is everything, guys. All right. So I hope this kind of helps you guys. And let me just do the futures real quick. Again, let me just show you on how this actually works again. So here's your pre-market. Okay, so I'm going to use this wick right here. I'm going to use that wick, and then I'm going to use these candle bodies right here. Okay, lines are not perfect. And then again, the pre-market down here, this thing kind of went super low here. You can use these candle bodies here because there was a lot of demand here. And you can see the same thing happened here, right? Look at this. We kind of broke down, but we never trended down. That's the difference. We broke down, but we didn't trend down. Trend down means that there's more candle bodies going down, building a staircase pattern. In this case, this thing actually broke above. And here, you can kind of see that we had some resistance and we broke above on that specific level. All right, so again, if you're that trader that's not buying the dip, that's cool. You don't have to wait for this dip. There's other opportunities. So here's your other opportunity. And then again, we break above this piece here. That's your other opportunity to go long on. This is, by the way, QQQ if you don't know. And then your target becomes here. Look where we actually hit. Okay. Like I said, there's a lot more traders that like to buy tops. So this is probably the reaction of those traders who thought that we're going to keep on going to the moon after we just ran from 144.70 all the way to 147.25, and somebody's still trying to buy these tops. Don't buy those tops, guys. Once you get these entry points, stick to that and don't chase something. And then this becomes your next target, right? So by tomorrow, hopefully we can be up there tomorrow, which is usually same levels, right? So, just showing you guys again how the pre-market levels work. And this strategy, like I said, it's everywhere. And it's no big secret. It's just I want to be able to share this with you guys so you guys can get an idea on how to scalp trade something and how to make the most of it. There's a lot of patterns out there, bull flags, pennants, and all these things. But we'll definitely get to some of that in the next couple of videos. But for now, guys, I want to give you guys how to use the pre-market hours. And remember, use the futures. If the future's coming down, there's a high probability that your stock is coming down with it. If this thing is going up, then there's a high probability your stock is going up, unless there was some news, some catalyst that drove that stock down, and then it's the opposite of the futures and the opposite of the market. But use those pre-market levels, guys, to help you and guide you. If you guys don't have them on, go to your broker and make sure that you have extended hours on. I don't know what broker you guys have, but normally you guys email them or find it in the settings or things like that. But make sure you guys have them on. It's very important to have that on. All right. So I'll leave you guys with that. Hopefully this helps you guys and be some scalper traders out there. For those of you guys who do know how, those of you who don't, I hope this is a new light bulb for you guys and gives you a little more clarity and knowledge and just adds more tools to your trading journey. So yeah, stay green, guys. Manage your risk properly. Please don't chase. Don't have FOMO. Don't get biased on anything. Respect your entries and exits, stop losses, take profits, respect it all, and find that consistency. I guarantee you guys will be okay as long as you respect yourself. All right. I'll see you guys on the next one.